Um, how do you see this week panning out, given the fact that the global markets are placing itself for the December rate cut, and within our markets, we are on a we are at a place where the Nifty is about 26,000.
So I think we have to look at what are the conditions which are driving the market. So I think domestically it is more or less a benign kind of a scenario. We have got better than expected results of the last quarter, and this quarter is expected to be very good as far as consumption is concerned. And I think the initial first 2 months has been pretty good from the discussions I've had with companies, especially on the consumption side. So I think market is expecting two or three things now. One is the current quarter results are going to be much better, especially on the consumption side. Secondly, market is expecting a deal to happen, the US tariff situation getting signed anytime from now till the end of December. And the third one is basically a possible interest rate cut in India as well as in the US. So I think a lot of positive expectations. That's what the market is, I think, looking and poised for maybe a new high.
Nischal, hi, good morning. This is Harsha. We were just talking in the newsroom earlier this morning that while markets are close to their all-time highs, or the Nifty is, the real pain lies in the broader markets, where some stocks have come significantly off those 52-week highs, some correcting as much as 50%. Now, you may say that is the nature of markets. Some stocks will have corrected, but here the differentiator is plenty of stocks have corrected. It's not just some, especially in the broader markets. What do you make of this trend? Do you believe that going forward as well, there is a larger scope for a large cap rally, or the mid caps and small caps are better placed?
So I think market is just correcting to its norm basically. So all these companies, especially the mid cap and the small caps, where there was intense speculation and the valuations were totally out of whack, I think that is getting corrected. And that is rightly so also basically, because the difference between the large cap and the mid cap and the small cap was very wide. And that has to go back to its normalization. I think that is what is really happening. Going ahead, I see basically, especially the mid cap and the large cap doing much better than the small cap, because as the liquidity scenario eases, which I still believe basically the transmission is not happening, the rate cut transmission as well as the liquidity is still not available to the smaller caps. I think as and when it eases, I think the small caps will also start doing well. But in the medium term, I see the large cap and the mid caps doing better than the small caps.
Okay. There's also MSCI rebalancing, which is expected to be effective today. Additions are Fortis, Paytm, GE Vernova, TND, and Siemens Energy. The deletions are Concor and Tata Elxsi. You might see moves on these counters. Kunal, I know it's a difficult day to predict some moves, but any of these names on your radar to capture this opportunity, if at all I can call it that?
I think Container Corporation could be an interesting bet over here because the risk reward is a little bit more attractive, purely in terms of the charts, nothing in terms of the flows. But I think purely in terms of the charts at 510, 515 mark, the risk reward looks very much better for the stock. Fortis Healthcare also, I think, has gone through a decent correction over the last, I think, a week or so. But then prior to that, the stock at 1,000 plus levels was one of the better performing hospital names, consistently over the last, I think, many quarters prior to that. So maybe that could be another level to watch out for, but not too much of a view into the other names.
What about some of the companies, because we're going to see roughly in the last half an hour when the VWAP happens, a lot of reject happening because of the MSCI. How do you think the traders should position themselves, or investors should position themselves because of this heavy inflows and outflows which are expected?
See, ideally what happens, it's a half an hour volatility for the respective stocks, and there could be a point where these stocks may gain a couple of percentage points, and there would be, some of them where there could be more selling pressure. But that's a very nominal kind of a move. It generally gets corrected itself over the next couple of days. If there is an abnormal price action into a few of the stocks, we generally expect, and we've seen this historically also in the categories of inflows and outflows, there is an abnormal price action for these stocks in the part of an overall trend which is played out. That abnormality just corrects itself over the next couple of days. So that's why I would believe that it's maybe an event-based trigger into these stocks. You might probably have an opportunity where these stocks may rally up a 0.5%, 1% broadly from the 230 to 45 lows for themselves. But then broadly, I think if you can participate on that as pure short-term trading play, then yes, there could be an opportunity. Otherwise, I don't see a major opportunity or a change of trend.
Nischal, aviation stocks, and one of those will be Interglobe. Inclusion in the Sensex 30 index. It's a big move, of course, for something like an Interglobe. Your take, and how would you play aviation, if at all you would play that at this point, given the kind of valuations it trades at?
So I do not see any change as far as the inclusion is going to happen on Sensex, because I don't know how many funds now follow Sensex. Most of the people must be on the Nifty 50, and I think it is already there in Nifty 50. So not much of a change. As far as aviation is concerned, I think it's already done its part. Basically, the stock is up. I don't know. It's done really well in the last 1.5 years, and already a monopoly. I'm saying the largest market share. Valuations are at peak. I think it is the best is hold basically if somebody already owns it.
Okay, let's take a pause on this conversation. Let's bring in Jignanshu Gaur, Director and Senior Research Analyst at Bernstein India, who's